Bitcoin's price staged the ultimate comeback in 2023. The crypto industry, though, still has big problems. Valuations have cratered, and so has funding for new projects.
Most venture capital right now is trending back toward the kind of 2018, 2019 numbers. I would add one caveat, though, with Web3 to remember, is that when you're looking at numbers that go back to 19 or 20, you're talking about a pretty much a nascent industry. People didn't even know what Web3 was at the time.
Global VC funding is down across the board. In the first 3 quarters of 2023, VC funding has plunged 42% compared to the same time period from 2022. Web3 companies have fared much worse. In the fourth quarter of 2023, Web3 companies raised a paltry $1 billion. That's a far cry from Web3's peak funding rounds in late 2021 and early 2022, when Web3 companies were pulling in just under $11 billion a quarter.
Web3 really started to be affected even kind of maybe in the first half of 2022. And then we really saw we saw a substantial decline.
That doesn't mean Web3 development has totally disappeared. Some, like Ann Steffen of Cubist, even found ways to raise money as funding dried up.
We raised our seed round actually in the summer of 2022 in the midst of the Terra Luna crash. 3 of my founders are computer security professors, and I've got a background as a COO at a fintech company. I think that really helped us come in and secure a good, solid round of seed funding in a difficult environment.
In terms of operating through a crypto winter, I think we are a little bit fortunate in the sense that we get to work with usually folks that have raised capital and have a very long time horizon to execute. And so a lot of our customers are folks building right now and are building things that are going to launch now or 2024.
What's left behind after the cascade of crypto scandals in 2023 are the most dedicated developers working on projects like Layer 2 technologies, which boost the speed of transactions.
I think that if you're an infrastructure player right now in Web3, if you're kind of a layer 2 platform building off an established blockchain, I think those players, those startups have significant space to grow. I think they'll continue to see investment.
There's been huge developer interest and sustained developer growth in L2s, especially Ethereum L2s.
Electric Capital tracks the pace of open source development through its developer report, and what the data shows is that monthly active developers aren't necessarily beholden to the price of crypto. Development activity rises when the price of, say, Bitcoin goes up, but when prices come down, activity doesn't necessarily fall at the same pace. The pace of development heading into 2024 is still about 75% higher than it was at the start of the last bull cycle. One important point though, this data doesn't track all developers.
Another category that has a lot of growth but doesn't get captured in these numbers would be gaming. A ton of teams are working on games. Games tend to be closed source, and so it's hard to see that reflected in open source numbers.
As institutional interest in Web3 picks up again, developers and VC firms are also gearing up to fund what they deem important, technologies like tokenization.
So you're starting to see a lot of this concept of bringing assets that were historically not as liquid and creating liquidity around them by leveraging crypto as kind of crypto rails.
As of today, cryptocurrencies are by far the largest subset of digital assets asset class, and I would predict that in some period of time it will not be. We will see tokenized everything, tokenized financial securities, tokenized real estate, tokenized other assets.
In 2023, SC Ventures announced a partnership with Deutsche Bank to test a challenger to the traditional banking system, which would allow transactions of stablecoins, CBDCs, and more. In 2024, many expect that institutions like big banks and governments will be a primary focus for crypto developers.
Institutions ultimately serve retail. So when I'm predicting that over time, you will get access to digital assets products in a curated way that is compliant with rules around suitability and the rest, it is institutions who are going to do this for retail consumers. Why did we start with institutions as opposed to retail? Well, because the infrastructure wasn't ready for retail. The asset class is here to stay. Therefore, institutional adoption will occur. It is inevitable. But for institutional adoption to happen, we need institutional-grade infrastructure.
Another big focus in the new year will be crypto regulation. Regulatory uncertainty still persists as the SEC sues major players in the crypto space, which may be a factor leading into the decline in Web3 development here.
What is alarming is the clear downward trend in US share of developers. And so that clear 2% loss of developer share every year is something that's unique to the United States, and you don't really see that in other regions of the world. Anecdotally, I've also been speaking to a lot of developers and crypto teams, and I think there is a lot of concern around the lack of regulatory clarity in the US that's driving people to think about moving abroad.
Meanwhile, the UAE has been lauded as a crypto-friendly hub.
The UAE is building a very powerful ecosystem around fintechs and specifically digital assets. And what I mean by ecosystem is the combination of the bits and pieces that it takes to create a hub, meaning obviously startups, but also early stage capital, and also growth capital, and also academia, and also the body of professionals around this, from lawyers to accountants to technology that it takes to do this. And yes, there's a regulatory framework.
In 2024, the projects that are likely to get the most attention could be the ones that are most creative and most forward-looking.
We think everything out there turns into a wallet in 5 years. So if you're going to open your phone and you're going to look at all the apps on your phone, they're going to have a wallet component. You might not know about it. It might be in the background.
I'm excited for the market to come back and for new startups to get funded. And I'm also excited to see some of the existing startups take on additional funding as well so that they can start to scale as they see traction.
I think the types of things that will take off will be completely out of the box and things that we haven't seen before or haven't even imagined. And so I would definitely encourage founders to, rather than taking something that, maybe works in Web 2 and applying it to Web 3, really think about what can be uniquely enabled by blockchain and by crypto.